Hello, everybody, and good evening, and welcome to Stocked with India and Business Insider India's discussion on tracking markets and beyond. We have Safir Anand joining us, and we have Yash Upadhyay as well, who is coming about, and we're going to be talking about everything that's happening around in the markets, and of course, gives you an opportunity to ask all our guests anything that you have in mind. So, once again, if you have anything that you would like to ask us about, keep those questions ready, and we'll look forward to having you join us on the discussion. Hi, Safir. Thanks for plugging in. How are you doing?
Very well. Good evening, everybody. It's been going on well for me.
Safir, let's talk. What's happening in the markets right now? There's a bunch of interesting movements. Today happens to be a 2-year anniversary of the markets bottoming out as well. What's your readings over the last couple of years?
So the reading for the last couple of years is relatively easier because the last couple of years the market trend has been on the upside, despite the fact that it does have occasional dips in between. It's the reading in the last few months becomes more complex, uh, uh, simply because of a lot of geopolitical events that have transpired and also issues such as inflation, Fed, etc. But I'm relatively very happy with the market for the fact that despite all the geopolitical problems and the concerns on oil and the tightening by the US, inflation, FII selling, a huge number of issues that have the fact that LIC divestment has not happened in this fiscal. Despite all those measures, the Indian market is holding out very well. And in that sense, it's been a sort of a big plus to be invested in the market.
Hey guys, can you hear me?
Yes, Yash.
Good evening, Xavier. Good evening, Ashwin.
Hi, good evening.
Sorry, I think there's some issue with my Twitter account for some reason. Spaces tends to act up. I'm not sure. You were speaking on something, Safir. I might have missed the question. You want to go ahead and complete that thought, or
No, I was just
okay?
answering the fact that the dissection of the market. I was asked this question that what is my view on the market in the last for the last few years. I said the view for the last few years has been very easy because the market has obviously moved up year on year for the last many years. The view on the market becomes more complex when you start analyzing the market from maybe October, November last year until now. Having said that, I'm saying that the general mood of the market appears to be a sort of a bravado front because the market, despite all the attacks that it is likely or it should have faced on fronts ranging from oil, interest rates, FII selling, US Fed tightening, geopolitical concerns, commodity prices, supply chain issues. I mean, you can keep adding. There's so many of these factors, despite lack of LIC divestment, which otherwise would have been able to control some of the government expenditure and government investments. Despite all that, I believe the market has done reasonably well. So therefore, I cannot grudge against the fact that the condition of the market has been healthy. The market does go through occasional corrections of the kind that it has gone through in the last few months. Having said that, the bounce back is also commendable. It's not bounced back to the level where from where it fell, but the bounce back has been commendable. So I have no grudges against the market.
Safir, it's also the 2-year anniversary of the markets bottoming out after what was one of the sharpest correction in the history of global financial markets today. Just taking a step back and wanted to get some of your thoughts, and if you could share what your experience has been like in these last couple of years, some of the learnings that you've gained along the way.
Yeah, see, there are many different learnings, and they obviously differ from what we are talking in context. For example, if I'll borrow from a short-term example, just 2 days back, my legal interpretation of the lawsuit against Z was that it was a very positive movement, whereas the market that day decided to punish the stock and it was down some 5% all. And I used my legal acumen to explain why it was a positive development. It was actually a win-win situation, having regard to the implications. So market will always have opportunities. One of the learnings of the market is that it will create opportunities. The opportunities will come by either wrong thinking, or it will come by an extreme short term thinking. Sometimes the reaction of the market is extremely short term. For example, there may be a company that has delivered exceptionally good results, but because there was a build up in the stock price, or because the news is already out, sometimes people come and the stock changes hands from one hand to the other. So the first point that I've learned in the last few years is that the market is full of opportunities. Every single day there are opportunities in the market. The second part of it is that it is easier to be prepared in the market than to sort of react to events, which basically means, as an example, I find a reason, as for example, at the end of the day, if I have money, I find reasons to select my stocks that same moment when the market is not open, and I'm not biased by the price. And because then, in a real sense, I'm looking at the worth of the business. And even if the next day the price is slightly up or slightly down, it should not change my decision to buy. The third is what is the scope of the company that you're buying. So if the scope of the company is substantially long term and you believe that it will really compound well, then every dip is an opportunity, and every rise is also an opportunity, because it is only strengthening your belief, and that is like a gratification. So as an example, many years back, and I've cited this example in another talk, many years back, I used to look at a pharma company, and they were spending a lot of money in terms of research. So effectively, the promoter, instead of taking money out of the company, was actually converting the earnings of the company into R&D, and the stock market was not being kind to the company. And I actually used to that time drop in an email to the managing director of the company, just congratulating him and saying that you're on the hard path of life, which will have a huge transformation of the company. And he used to reply back to me saying that you are perhaps the only shareholder who pats my back for this. I, as a promoter myself, do not find encouragement in the way the market reacts to my stock, because the stock was not going up and people were taking very adversely. And today itself, I tweeted that company, if, I had bought that company at around 60 odd bucks. They divested a division which was then sold. I mean, I was able to exit at maybe 120, so my capital was returned. In fact, I was sitting with capital in my pocket, and since then the stock has gone up 12 times. So just to give you an example, you will have, sorry, 20 times, because there's a one for one bonus. So you will have a lot of opportunity in the market. Now the question is that you have to look at the patience that you have and the conviction that you have vis-a-vis the time frame. Because if you start changing lanes too frequently, or you get perturbed by, for example, suppose the company had one bad quarter in between. Now, if that did not change your ideology about what the company was doing, then you have to, you see, the good part about retail is that you're not in the business of NAV matching. You're not going to be writing a NAV sort of a report at the end of the month, and somebody will pull out money because you've not the best performing fund, and maybe you've come second, third, fourth, or whatever. The point is that therefore you have to have the mindset of wealth, and not the mindset of creating these short moves in stocks which are completely out of your control. Then you will find the magic of compounding. And when the magic of compounding happens, see, also to illustrate this point, if you buy a stock at 50 rupees and the stock thereafter goes to say 600 rupees or 1000 rupees, your dividend payout is on 50 rupees. So the cash return to you is very, very high, commensurate to the market price, and somebody buying it at 600 rupees. So in other sense, that is like a business that is giving you back a lot of return. So it's beating every single other asset class in terms of safety, like a fixed deposit or anything else that is an income yielding thing. And at the same time, you're compounding wealth. That's another thing. The fourth thing is that, that I've learned from the market in the last several years is, please have an independent mind. Now, whether that mind is right or wrong, please start searching for facts. And when you start searching for facts, both on both sides, that is assuming I'm right, and how right am I? And if I'm wrong, then how wrong am I? And what is the detrimental effect it will have on my portfolio? If you start doing fact scouting, then you will discover that your conviction, either to continue, hold, add, or sell, will become much more pronounced. Whereas if you concentrate on too many market voices, looking at television where technical calls are being given and which calls change every 1 hour, or you look at some news that is extremely short term, or for example, right now, if you say that certain companies, quarterly results are being impacted because of high commodity prices. If you believe that this is going to be a trend in perpetuity, then in any case, we are doomed, because commodity prices being high means the cost of inflation and raw materials and profit margins and customers buying power and all is going to be impacted. But if this is a temporary phenomenon, and which may phase out in 1 month, 2 months, 3 months, 5 months, 6 months, then your returns can be staggering, because you will not get the stock at the price at which you think everything is fine. When everything is fine, the stock market price won't be fine. So you have to have a mindscape towards that, and then use your savings. Not do not go into a situation in life where whatever you invested in the market is required for the purpose of your expenses or your enjoyment or for certain necessary expenses. And then you will, if you have that sort of mindset, you will do well. Which also means ignore noise to the extent that hear it, but check it on facts, because sometimes a lot of noise is just a murmur of a room, sort of a furor of the crowds, and is not really necessarily logical. And the next part is, at least for me, and that may or may not apply to others, I'm a diversified investor. And why am I diversified? For multiple reasons. See, if my stock does well, anyways, it will compound my portfolio. I do not believe the fact that a stock doing well will not generate the kind of returns and you needed to put 25% into that, because that's not happen. Conviction is always built over time. Conviction is never spot on day one. If it was so certain on day one, the promoter would have bought 100% of the company on the same day and left no shares with you. Even the promoter doesn't know what are the different elements that can surprise the company, who can leave the company, what is the competition doing, etc., etc. There, what is government policies. So the point is, when you are diversified, when you find that your conviction is proving right, then you start adding more and more and more to that overprice. It doesn't matter that you bought it at 50 and then you're buying at 70 and then you're buying at 100 and then you're buying at 120, because you're only making a case better for your for the vision that you have of that company to play out. So that also gives me a lot of satisfaction, because inevitably a lot of things go wrong. They don't have to go wrong because the company has a governance issue. Sometimes somebody else is trapped and the institution wants to exit. After all, there are some very high quality companies where some institution comes and sells even 25,000 shares, the stock falls 6 or 7% because that day nobody wants to buy, or many other things that happen. In that sense, it gives me a much more comfortable sleep to know the fact that even if certain companies in my portfolio do not do well the next couple of days, unless there is something drastically wrong which should allow me to move out, I don't have to worry about an erosion. Remember, capital loss is very, very difficult to replace. Notional loss of portfolio is very easy to sort of come back. So permanent capital loss never comes back, because that requires you to have a printing machine at home, which is not the reality. So neither does money grow on trees and plants. So you have to be very conversant about that. And the last point is, I think a lot of people always wait for the right timing. I do not understand what is the right timing. If the horizon of a company, if you believe a company will grow multiple times over the next several years, then every timing, today of buying or tomorrow buying or day after of buying, depending upon what kind of disposable money or surplus money you have, is the right time. But if you think that no, it was last week, it was 200 and now it is 210 and I should wait for 200, then many people will miss the bus just waiting for the perfect price. Because when the wave comes in a stock, that wave is a secular wave and the stock can even go up to 5 times, 6 times, whatever XYZ, and you will miss a lot. So if you find that the price, I mean, don't get so fixated on price. If you find that there is huge incremental value, it's like exponential value. If you find this exponential value and you, for whatever reason, you don't find, anyways, you're buying over a period of time. You can buy some shares today, some shares after a month, some shares after maybe a few days, or whatever is your surplus money. So I don't, that's another thing that I like to factor in mind. And the last thing which I've really learned well is that, for example, because I'm active on Twitter, please don't get swayed by the negativity of people. Yeah, remember, the most successful investor has to have an optimist mind. Optimist mind, even if you feel that the market is not going to go up, that may be a true situation for whatever reasons today. You may feel that a certain company's valuations have peaked, whatever XYZ reasons. But over a period of time, you know that this is not going to last. And this is how the record of companies has been, the record of markets has been. So you have to have an optimist mind. The optimist mind, therefore, looks for opportunities. The optimist mind never gets closed. He always believes something good is happening, and therefore, to encash that something good, he's looking somewhere. and that makes the journey. Even otherwise, optimism gives you happiness also. So even that journey itself is a better journey. And to that extent, if somebody comes on Twitter, and while I try to be nice to everybody on Twitter, if I find that somebody is being overtly rude, or on fact, he doesn't want to talk fact. If you want to argue against me that a company is the best company, but I ask you why, and you can't write two lines, or a company is bad and why is it bad, you can't write two lines, don't waste your time, because your mind must be free to pursue the next opportunity, not every blockade. So these are some of my learnings from the market that I wish to share with all of you.
Thanks for that, Safir. There's something that you said a while back about Indian media companies, and it's just been playing in my mind. Now, media is in a very interesting space at the moment, right? But my worry is the media companies out here, these are legacy media companies, and media consumption in India and really across the world has moved far beyond, right? Do you think the market is really understanding the potential of new age technology?
So when you talk about media companies, if you're talking about media as opposed to media as a just a byproduct, I feel that they are not legacy for multiple reasons. For example, in one particular company that caters to the market and business, there has been a transformation of ownership. In another company, there has been a transfer of, now with Disney stepping in, the entire Sony stepping in, the entire issues of governance, and the entire issue of the content they have, and the scalability of the content can change. I mean, if you were to ask me to assign a price to earning against a promoter credibility, and you say that the promoter of the company is a very well established global brand, then I would say that typically that would mean that other, unless something really drastically bad happens, that would typically mean that governance standards are improving. Then there has also been a transformation in many ways, because traditional media, for example, if I go back into the earlier modes of media, it was controlled because, first of all, we had limited channels. Then it became a whole bouquet of channels, and there was it was very confusing to decide what to watch. And then and all of a sudden the quality of content went up. If you today look at the quality of content that comes on OTT and other platforms, it is becoming at par, sometimes even with high Bollywood and Hollywood content. In fact, Hollywood and Bollywood are also a part of that, but I'm just saying the content is going up. So there is a reason to that you want to watch this. Then there are other factors that are also transforming this. For example, the ease of watching, because it is available on your mobile. So if you're in your car and you are just got 20 minutes, or you're waiting for a flight, I've seen so many people catching movies in the flight while at the airports, etc., etc. So there's a lot of change that is happening there, and the prices are coming down. So this is usually when you are able to increase market share by at a time when the prices are down, that means that you will have a huge run. Because if the prices keep going up, then somebody or the other will find affordability an issue. And to that extent, I think there's a transformation happening in on the electronic media side. Of course, the print media is a huge bother, and that's not where I think you should be focusing right now.
Got that. Thanks for that, Safir. Yash?
Yeah. Safir, if I can just come back to your previous answer, and you explained beautifully about all the learnings you've gathered over the last 2 years, things like not trying to time the market, diversifying your portfolio, and, focusing on researching and finding out the facts. A lot of our followers on across all social media platforms are mostly first time investors who got in this bull market in the last year and a half. Probably the last 1 year hasn't been that rewarding, and obviously 2022 hasn't quite gotten off to the bestest of starts. In that context, if you could just explain slightly what would a starter pack for new age or newbie investors would be right now. How do you spot ideas, or what are the tools or books that probably you read which new age investors should also follow to actively seek out such ideas?
Yeah, see, I'll answer this question in parts. First of all, any new age investor should not buy what he does not understand. And this is whether he's new age or he's, been there in the market for long. For example, sometimes people get in touch with me and they say, we have made a lot of loss in the market. I say, what happened? They said, we bought options and puts and calls. And I said, why did you buy them? They say, a friend bought him and he made a lot of money. So I thought I'll also buy them. So I said, did you realize what's going to happen to the stock? Like, is there a rationale? He said, no, I didn't. So it's the lure of quick money will always be deceiving. you may be lucky that it's like going to the casino. I go and play roulette and I put money on the table, and all of a sudden there's a sort of, I hit a jackpot and I get 35 times or 36 times that money. Try repeating that again and again, and you'll discover that at the end of it, you would have lost more money. You probably would be in debt. In other words, you have taken money out of your pocket and given it back to the casino. Because in a casino, you will see that while they will glorify the fact that a few people are winning, the reality is that, and we get enamored by those who are winning because they put up substantial amount. The reality is they are very small part of the entire people, sort of gaming population, that is, or the gambling population, whatever you want to call it, that is at play. So nobody glorifies the mistakes. I mean, nobody highlights the mistakes, sorry, but always glorifies the wins. Even in the stock market, when you find that somebody in the market is talking, and I see this a lot on Twitter, they're putting up their sort of snapshots to say that this is what our daily profit looks like and all. First of all, you don't know whether they are being honest itself. Because if those people are getting it so right, then their names would appear, they would be paying taxes, they would have genuine accounts. Half of these people don't even have real names. They don't, I mean, they use sort of pseudo names. They don't have a photograph. The kind of ideas that they talk about, sometimes you don't even know. They may have, see, let's assume that I have to buy, say, 1,000 shares of, say, ACC. I buy 1,000 shares and I sell 1,000 shares the same day. So my net position is actually zero. I buy 1,000 shares at one counter and I sell, say, 1,000 shares at another counter. And then at the end of the day, I take a snapshot of whichever is the winning position. How do you know? Because that position is also true. But I'm not telling you that I did the exact opposite position also and my net effect is zero. But by doing this, I'm able to improve my visibility, say, on social media. Then I launch paid services, and then in the same paid services, 50% of the clients buy, 50% sell. The guys who get it right think I'm very good, so I use their handles to publicize myself. And the guys who get it wrong, the next time I tell them, no, you will recover it. And humans are only living on hope. We all love hope. So we believe that sometime we'll all strike gold, which is at the end of some rainbow, which is I don't know where. So sometimes you have to understand this rational, and you have to say that I will do what is in my control, what I understand. Now, if, for example, if common sense tells you that this is very easy to understand and it is very likely to play, and of course, it could be a function of time. For example, companies' earnings will catch up. Some of these businesses will never get destroyed. You are not overpaying. If you pay 100 times for a company and you think it is really great, remember that if this was true, then in the history of the US market, which has a way better history than India, people would have owned the top 10 consumer companies for the rest of their life. For multiple years, Coke had no return. So if we get enamored by, say, Warren Buffett owning certain things, don't forget that Warren Buffett bought these companies immediately after the Great Depression in America, where the start of the baby boom. And that baby boom was literally the growth of capitalism. And at that point of time, those companies were global companies. They did not grow only in America. They were expanding operations all over the world. At that point of time, they had two tools of efficiency, which meant one, top line efficiency, because they were growing all over the world. Second, bottom line efficiencies, partly coming because of economies of scale, partly coming by better technology, better brands, return on brand, etc., etc. Today, a lot of efficiency has been squeezed out of the system. It has been squeezed out because every other person I can read, there are business consultants, there are processes, there's technology, there are elimination tools, there's ERP, there's so many things, SaaS, so many other things that basically are eliminating, the leakages. So the bottom line efficiency is not an opportunity in many of these companies when they're at 100p. They only have to look at top line growth. But when you look at a mid cap company or a small cap company, he still has scope of both earnings because he's not reached the efficiency curve. So therefore, if you get it right, you're going to get it. The chances that you'll make money are going to be higher. So again, understand the competencies around that and the opportunity size. And don't sort of think that you have to come first in the class, because even if you don't come first and you are the 100th best investor or the 1,000th best investor or the 100,000 best investor, it will be a phenomenal amount of wealth for you.
So, Safir, if I can just come back, what are the top three things you look out for when you're picking up stocks? Then,
Yeah, so I got lost in my this huge narrative.
no
You
worries.
had also asked me a question on the timing of the market. Now, I do time the market. It will be wrong. I don't want to lie to all my friends and followers and well-wishers. Timing of the market is a function of thinking. For example, there are certain times when you look at the market and you have too many choices. because market is corrected and you are confused and you say, oh, this company has also come down, this has also come down, and some of this correction is not a catastrophe. It is very different when, for example, you have a subprime crisis in the United States of America, or you have a huge default in some part of the world, something of that magnitude. Then you do not. There can be a prolonged period of uncertainty. As an example, when COVID struck, we did not know initially for the few days, and March itself, March of 2020, the market was brutal. Now, in that point of time, to think that April would have been ideal and May would have been great is not so easy to do. But at some point of time, you realize that the world is not. If the world ends anyways, it doesn't matter what you own, because anyways everything will become zero. But if you feel that no, they are going to, so then you sit down more like in a state of meditation and you ask yourself that wherever there is an adversity, there is an opportunity. That is the nature of the way the economic systems work. Somebody will capture something. For example, today if the commodity prices are high, the commodity companies are making profits. Now the commodity companies, when they make profits and the entrepreneurs make profit, what will they do? They're likely to do more acquisitions. When they do more acquisitions, it will be a beneficial thing for a lot of people on the financial side, because some of these will be finance, some of it will come from people who work on the deals, etc., etc. Then for lawyers, for example, it would be beneficial because they will be doing documents and all. So the sum total of all this will again be a spending by those who are benefiting, the spending or saving or investing or something. So sometimes have a logical mind to see that where is the puck going, or where is the whatever word you want, opportunity coming, and then you start thinking that let me build a portfolio around some of these companies. Second point is that a lot of people forget, and this is not I'm saying it, this is historical, that markets revert to means, which means that a lot of sectors will revive. When there is a lull after some years, there will be a capex in those sectors. A lot of capacities get shut down because initially, when there's recession, people don't invest in sectors. Technology upgradation happens. There are many opportunities that come in. If you find that the price of the stock has come down commensurate to its potential, then there is no reason why you should be chasing everything else that the market is chasing. For example, I may have been invested in platform companies some months back, and I've spoken about them, and the returns did well. But to think that platform companies are going to be eternal, even if they are at an absurd valuation, is a huge doubt. Now, it's very interesting that on one side, I was bullish on some platform companies and I bought some of the stocks like a CDSL, IEX, at one point of time, India Mart, etc., Naukri.com. On the other side, I was extremely bearish on some of the other models like a card trade, a policy bazaar, a Paytm. In fact, I said that there's no way that they will trade at the kind of valuations that the market, because then the question is, why do you think like this? Because there was a frenzy. So you go and you read a little bit, you read a few books, and you understand that there is something called networking effect. There has to be an exponential growth around networking. The solution to everything is not to say that the company has data. The data can be completely. If you tell me today that what my cook is going to eat at dinner, that's data, but how does it benefit me? If you It has no relevance to me. That's not going to change the way, because I do not know what the cook in your house is going to do, or what my driver is doing, or what I will do, or what my office guys are eating, etc., etc. So understand the data also has to have a purpose, and it has to have a sense of direction. That direction must also not breach anything. For example, if Facebook had a lot of fall in the US market because of the European Union problems, EU problems on data, and Pacific data and Atlantic, all those kind of issues that came out. So be a little pragmatic in that sense of timing the market. Similarly, for example, right now we find that there's a metal frenzy, and therefore in the metal frenzy many sectors were being ignored. How difficult was it to understand that if the gas prices were going up in Europe, then all the producers of commodities in India that did not have the same problems, such as non-availability of gas because of Russia or because of certain plants being shut down, would have benefited, because they can technically supply to the rest of the world if they have that capacity. And if they're it, so therefore you saw a paper boom. It just took 1 week for paper stocks to go up 50%. And let me tell you, 50% returns in 1 week is really, really, really smart. I mean, the sense is not, you cannot think that that is like a poor return by any yardstick in the world. So look at opportunities like that. And I keep my mind open. I read a lot of newspapers. I read books. You must read books on a variety of subjects. some talk to intellectual people. And when I talk mean intellectual, it doesn't necessarily mean professors and people doing white papers and all. It means people who are experienced, people who have seen various cycles. People, for example, talk to an industry. If you were to call somebody in the paper industry and ask him, my normal logic would have been that, but paper should be falling because we are moving toward digital. So people come and say, but where is the packaging coming in from in Amazon when online packaging is happening, or for some of the other websites, Flipkart and other things. And then people say, oh no, but books are coming back. All of a sudden libraries are coming up, books are coming back, schools are going to reopen, and schools use. So you use all the ingredients of common sense and you then decide if there's an opportunity, and that's how ideas come.
Also, plastic ban and being more
Correct.
environmentally friendly.
Plastic, and then somebody will say, but don't you think that buying paper is bad because they cut trees? Then I say, have you read their policies? The government policy itself says that to cut a tree, should have already planted a tree. Then you look at Japan, because Japan, and you come and say they have come out with new techniques, just like they created bonsai in respect of the growth. They have created new technologies for planting trees, and you come and say, oh, that's also a very interesting factor. So there's a lot of things that then you look at. We say, oh, you know what, the luxury spending is going up, and we say, what is luxury spending? You go there and see they have the finest quality paper in which they package your stuff, and they'll have these carry bags that itself look very glamorous. Where is that going to come from? So those are examples. You keep looking at examples. Even right now, if you say somebody is impacted by oil, think who's benefiting from oil. And if you don't want to buy the guy who's benefiting, suppose you say that the guy benefiting from oil is Aramco, but you don't want to buy it because you believe it is cyclical. Fair enough, don't buy it, because that's a very smart call to take. But think that if Middle East gets the money, what does Middle East do? Middle East spends money on infrastructure, as an example. So if again you don't want to buy infrastructure because if the cycle changes, the money receipts get impacted. But there are think companies that cater to infrastructure that directly benefit because there is no credit cycle. For example, it could be tile companies. For example, it could be some cement companies. For example, it could be, there could be many reusable material, recyclable material. There could be equipment companies, as an example. So there are always going to be opportunities. Now you have to see what are your best few ideas, because you can't own the entire market, otherwise you'll just become a sort of a supermarket. So then you bet a little bit on some of your best ideas, and then while you already own them, there is a very good feeling within you, because when I buy a stock at 1,000 and it goes to 1,050, it's somehow rewarding me in my mind to think I'm getting it right. So that gives me an extra energy to research more. So I start reading more reports on it. I start finding what is the competition doing. Is there a sort of a differentiated business plan? And then your conviction is grows over time.
That's brilliantly comprehensive. Thank you so much for that, Safed. You spoke about new age investors a while back, and it's just been running in my mind. I want to talk a moment, move away from stock markets, and talk about the very culture of investing. Right, Indian stock markets, we're alive for 6 hours, but when it comes to crypto investing, it's 24/7 through the day. What are the very fundamental changes that you see in people when it comes to trading in cryptos versus new age investors trading in cryptos versus people who are still into the markets? The people, the thinking, the way they act, something on that?
See, I don't do cryptos. Therefore, for me to comment on cryptos will not be appropriate, for the simple reason that it is also very sensitive. And I have a lot of friends on Twitter, and the idea is not to comment upon an asset class on which somebody gets sensitive. I have a very bearish view on some of the cryptocurrencies, particularly on Bitcoin, which I've articulated the reasons for. So far, it has worked in my control because it has fallen almost $16,000 or $17,000 from the time I took a negative view. I do believe that the current situation in Russia and Ukraine is artificially creating a price point for some of the cryptos, because a lot of means of money transactions have been restricted in those countries. But I do believe that over a long-term period of time, some of the cryptos will correct a lot. At the same time, I'm really appreciative and I really believe in the blockchain technology, and companies that will embrace the blockchain technology in order to improve, which could include old age companies using blockchains for the purpose of whatever mechanism of delivery, customer interaction, product, etc., R&D, R&D, because it is because of encryption, or is software that will enable it. Just as there was a huge revolution in the cloud space, there could be a huge revolution in the blockchain space per se. So for me, it is easier to believe that if the blockchain technologies to do well, IT companies are going to be at the forefront of that. We are not US, where a lot of companies will be specialized in every single technology. Silicon Valley and other parts of US have very deep specialization, and but our good part is that our level of specialization in these companies comes from the same Infosys and the same TCS and the same HCL and the same Tech Mahindra, etc., etc. So then I will feel much more. I'll say my choice has become much more easier. And you could be the devil's advocate and say, no, I don't agree with you. I'll say, but the same companies did cloud. The same companies are doing digital. The same companies did ERP and the same companies did XYZ, and it's not changed. And because they generate real cash, which is measured quarter by quarter, because it is a foreign export, it is actually scrutinized, because the cash is distributed to you in the form of dividends, and a lot of ESOPs are given, and a lot of other things happen. They have a lot of talent. Therefore, it is much more tangible to measure, and that makes my life way easier when it comes to investing in this as opposed to doing direct cryptos.
Gotcha. Thanks for that, Safir.
Safir, I also want to get your thoughts in on banks, especially private banks. They've been one of the biggest underperformers, despite all the good news we are hearing on the economic front, the GDP growth, the tax collections, toll collections, everything. Do you buy this argument that banks will cede share to fintech platforms, or is there any other reason, possibly the FII selling pressure because they're heavily owned by FIIs, that is driving this underperformance in private banks?
So, first of all, I have been a vocal advocate of the fact that the fintech model is going to only cause incremental value to banks. I do not think that the fintech model is going to do anything except enrich the banks, because the banks are also adopting to a lot of technologies that after learning from these experiences. Secondly, I had said this on the eve of the Paytm issue itself, that in order to transact on Paytm, I have to link my bank. There are a lot of things that happen because of the banking things, in the sense that where is the payment coming from, if somebody is transferring money, a lot of things are being enabled by banks. Even if you look at it right now, for just 3 days back, one of the most respected companies of US, which is Visa, has reported a very high growth rate for India. But at the end of the day, Visa is a card, and several, not only a card, debit card, credit card, and other forms of card, but it is linked to a bank. The issuers of these are also banks. So I believe that there is a huge value to begin with in banks. The second part of it is, I'm not at all in consonance with the fact that the private banks have underperformed. It is only the fact that HDFC Bank and Kotak have underperformed, and therefore we get carried away and we think that the banks have underperformed. In reality, ICICI Bank and there are other banks that have actually outperformed a lot. So in that sense, we have to look at it. We have to look at why is ICICI, for example, outperformed compared to HDFC Bank? Because ICICI in the last few months after Ms. Kocher left and they had a new management, has become much more quiet and much more focused on transformation. And that transformation is showing in the sort of gap that it is bridging between HDFC and ICICI. At the same point of time, I don't want to write off HDFC Bank and Kotak Bank, because they are phenomenal and they have history on their side. So, for example, just a few days back, HDFC Bank fell down to some 1,350 rupees or some amount, because the FIs were selling. And I put up a tweet saying that now, despite my own negative stand on HDFC Bank for the last 2 years, and those 2 years it has not performed at all, I now believe that it may be conducive to own it. Similarly, at some point of time, you will say that no, it is very good to own HDFC. But the point is, Kotak, but you don't end up paying some crazy, insane price to book value, because what is offered by one bank. See, the reason why HDFC Bank and Kotak did very well initially was that they had huge technology. They were able to leverage technology better than, for example, a lot of PSU banks. ICICI Bank had a lot of legacy issues in terms of management and other sort of, they were disoriented. So the problems are of a different nature. Now today, for example, State Bank of India is using technology which is at par, if not better than HDFC Bank. Now, when I go and look at the client surveys, and this is not, I'm not saying this, people put up, and there are a lot of nasty comments against HDFC Bank. It's almost like they've become too complacent because of the leadership that they had. And I have personal experiences. Very difficult to, your relationship managers have to be literally chased 3 or 4 times in order to get a result out. Then it's like, that is the first sign. Anybody who does not regard his customers or services to be of prime importance, over a period of time will start losing out on some service, which doesn't mean I have to shift my bank account away from HDFC Bank, but I will not go to them if I'm doing a car loan or a housing loan or I'm doing some insurance product, etc., etc. So you have to start looking at the sort of changes that are happening. I can tell you this, and I've been so, in the past, I've not been so vocal about it. I find that the client orientation right now, apart from ICICI Bank, is extremely good at Axis Bank. There is some real change. You should go to their app and see that every single thing that you do with them, the feedback is instant. Now, it's possible that 2 years, 3 years down the line, this bank gets into a leadership mode. So, if you look at it, it's not as if the private sector banks have underperformed. Even the PSU bank, look at where a Canara Bank has reached. Look at where a State Bank, I remember when I wrote for Outlook, State Bank of India was about 170, 180 rupees, something of that sort. It's at 500 rupees, and that's a substantial return to get from a bank. And uh, some of these issues are to do with lack of credit growth. Now, those lack of credit growth issues, I don't think are going to. That's where my talk was when I told you that if you believe that certain things will change, although it may take some months to change or some time to change, you will get the opportunity to accumulate. So you can continue accumulating XYZ. I'm not saying State Bank, but XYZ. And over a period of time, when the dynamics change and say the credit growth comes, the stock price will not wait for you. That's why investing is a process over time rather than do it all on one day.
I want to take a moment and talk about unicorns, Safed. Now, the companies that got listed a little while back aren't getting too much love. I mean, lots of excitement before the listing, and currently their performance, leaves a bit to be desired. How are you reading this? What's happening here?
So, in that sphere, what is happening is that most of the value that exists in these companies is being milked away by the venture capital world. And the venture capital world is then trying to force these companies to make certain bold declarations, acquisitions, do something which is way, way more dramatic than required. So even on the private equity side, like for example, I also invest in private equity companies. Earlier, I was finding the opportunities were very good. Companies would come, they would have good models, the promoters were very good, most of them were very well educated. All of a sudden, I find that startups come, the sales are running into some 5 lakh rupees, and they say that, our valuation is 50 crore. So I ask them, why is it 50 crore? And then they cite somebody else in the industry and say that, we've come out with our own way of valuation, which is not even heard of. Like for example, right now in the case of one of the listed companies, that 10-minute thing has come out because there the valuations are a function of the time that you take to deliver. Just because Domino's delivered in 30 minutes and revolutionized the industry, it doesn't mean somebody delivering in 20 minutes and then 10 minutes, and tomorrow they'll say, you know what, we are parking somebody right outside your own residence who is literally going to be like a hawker and he will be able to deliver the goods. Reality, you'll say, but you know what, you'll only cater to some 10 houses or maybe just the neighborhood. So where's the scalability going to come from? So what is happening is that in this greed of money, because of immense liquidity that came in from the international world and initially a lot of business model, people have got confused in the kind of valuations that has to be ascribed to business models. And the more complex we are making it, the more jargons we are using, some people are finding it very easy to fool others, which is why, for example, there are books that are written on how eventually, you move from, you try, everybody's trying to find the next fool in a lot of investing. And that unfortunately has worked in this scenario of high liquidity. But that is why when the market corrects, like it has corrected in the last few months, the punish or the whipsaw will also be on some of these very exotic business models, because now all of a sudden the guys owning it will also not understand, and then there will be panic. And at the same time, then people will go back and say, you know what, in this fall Warren Buffett has done well. Now I will read books written by Peter Lynch, and I will read books written by every single value investor that you can talk about. And then you'll say that now I'm going to be disciplined, and then for a few months you'll be disciplined, and again you'll go wild because you also want to chase. We, as human beings, this has got nothing to do with investing, this is to do with psychology. We love the unexpected. We feel that we are fascinated by the discovery of things that we have not. We like new food, new films. We want to find, we are even in dark, we want to find something. Somebody will say, let's go to the jungle. We feel that, oh, the lion or the tiger or whatever is going to be waiting for us. That's the way it is. So that lure of finding the unexpected wants us to commit a lot of mistakes. We don't balance our thinking. We have to be more pragmatic. And if you want to experiment, for example, whether it is in the nature of crypto, whether it is the nature of some fancy new companies, business models, go back to what I said. Be diversified. Put in, if you have to put in 1-2%. If your conviction is so good, suppose somebody had bought Bitcoin at say $1 and today is sitting with $40,000. He's already made so much of money that he can afford to lose even if it comes down to 25,000 or whatever XYZ. Are you in the same position? Ask yourself that question.
Interesting. Safir, continuing this conversation further on, and another area that is probably something that everyone wants to know your thoughts on is on FMCG. The likes of HUL, Britannia, Dabur are down almost 20-25% or even more from their all-time highs. Now, these are not loss-making startups with crazy high valuations. What's gone wrong here, and do you think that they can go down further, or is the worst in terms of the whole raw material inflation thing already in the price for these consumer staple names?
Yeah, so there, today it sounds very cliched, but the fact is, it's reality. I respect, as an example, Hindustan Unilever the most amongst all the consumer companies. It was like a dream company. In my college, I had got a job offer, and I could have been working for Unilever. Today is a different thing. I chose a different path. But you see, I myself had bought Unilever shares when Unilever was showing the signs of consolidation post their revamping of the brands into power brands, and then focus, and then value move up. Value move up means that from a soap you went into a liquid form, and then you went into a gel, and then you went into a higher category of shampoos, and then you said this is protein enriched, and then you were able to bring in a lot of growth. Plus, when COVID hit, you knew that the highest amount of certainty was in the capability of management and the adaptability. It was at that point of time, anybody who was willing to adapt, and was the faster they were able to adapt, grew. Whether it was, and these companies moved a lot into digital very, very fast. And you also knew that there were a lot of incentives that had to be paid to shopkeepers, distributor, many other channels, which they were able to sort of bring in efficiency, because online mode, they did not have so many of their intermediaries in place. The only, and also they had what is called as the ability to extract a monopolistic price, in a sense, not in a legal monopoly, but because you have economies of scale. If I am able to give job to say 500 people who deploy trucks for the transportation, and at that point of time I get into trouble, then history will tell you that I will have a better bargaining power as opposed to somebody who's inconsequential. The trucker will say, get lost, if you're only using one truck, I'm not going to give you a better price. It's just the same logic. You call up a hotel and say, I want 500 rooms, you'll get a better price. So those companies at that point of time, there was a huge efficiency that I saw in those companies, and I myself used to own Unilever at some 2,750 odd rupees or something of that sort. I forgot the price. I'd written on Twitter that, I'm bidding, I'm sort of saying bye bye to the counter. Not because of the fact that it's not a great company, it's a beautiful company, but there was no scope left for this efficiency play. That story had already played out. The company's stock had moved a very substantial 50%. That's a very large market cap. In that move of 50%, the company was not going to give me some bonanza, bonus in terms of dividend, because a lot of cash that they had was used for the Glaxo acquisition. So even that had gone away, and therefore I found that all the things that I had in my mind, and that is the reason why day before yesterday, when the company announced, which was later denied, but they announced that they were going to acquire that masala brand MDH, the stock actually fell down, because people said, oh, where will you get this 10,000 crores from? It will be another issue in terms of, because these companies have a very high return on capital. So if you find that, and synergies don't happen instantly, synergies take time. So therefore, that story had played out. The same thing happened in Britannia when it had moved, in terms of premium biscuits as opposed to basic level Tiger biscuit. Tiger at one point of time was such a huge contributor. Mari was a huge contributor, and then they said we'll do cream biscuits, and then we'll do cream filled rolls and cakes and whatever XYZ. Same thing has happened with Nestle. And now you have so many brands coming up with variants of noodles. Ching's is doing exceptionally well in the market. There are home deliveries, there are cloud kitchens that are coming. If I have to make Maggie in my kitchen, which is a efficiency matter, but I can go on Zomato and I get better quality noodles in 10, 15 minutes or 20 minutes, so then I don't care so much, no, because a lot of paradigms are changing. So you look at efficiency, chocolate market is impacted because a lot of people are getting conscious about health. And there are very high quality chocolates coming from startups, particularly people using bitter chocolates and other variants, etc. I mean, so many flavors of chocolates are coming. So you have to see that where is this efficiency coming from. So the current situation is that when they were at 80 and 70 Ps, there was no room left for efficiency. Some of them have corrected to 50 Ps. Now, I don't think they're going to fall significantly from here. But the question is, are they your best investment? Then, if you have an answer to that, invest. If you don't have an answer and you're discovering, remember there are 8,000 other companies waiting for you.
Wow, that was very comprehensive. Thanks for that, Safir. Now, I know we've got about 10 more minutes left of your time. I wanted to quickly come in on Indian IT services companies. Sweet spot, I mean, lots of digital boom happening around. Is that a good reason for us to be optimistic around on them at this point?
I am very optimistic. So I can only talk about myself. Now, the only reason why I say that I can talk about myself is, again, it's back to the same logic. If you have invested, I wrote about, say, for example, Infosys when it was at 750 rupees. Now, a lot of people told me at that point of time and said, but the best days are over and this and that. Now, the question is at the end, I in fact even wrote that it will outperform TCS in terms of return. Which is just my view. It's not that it has to play out, but it was my thought. So therefore, I had more conviction. Similarly, I wrote a lot in favor of Tech Mahindra and said why it's a great company to work, what will happen in terms of the digital revolution in telecom and the kind of things that they're doing, etc. So and then same, for example, with some of the mid cap companies like a Sonata Software at 180 rupees, where I said, when lockdown had happened, the stock had come down to 180 or some level of that, and I said that people need Sonata even more than they need ever, because he's the way where he's the mechanism through which digital is enabled in on the retail side. So if there are two things he does, but that is on the retail side and then also on the travel side. And I said, TUI, which is a very large travel company in the world, was using Sonata. So I said that all the more they will give business, because those businesses are not short sighted to think that in the time of adversity, when they should be converting into opportunity, they will let go of the tool that creates opportunity. Now, some of these stocks got re-rated and they did very well. Similarly, Emphasis, the change of management that was happening there and sort of integration that was happening because of Blackstone and other reasons. So today you're sitting on profits. Now, when you're sitting on profit, everybody thinks he's a lion because he's got it right. So he thinks that he's got the best sort of kill. The reality is that whatever returns we have got are all past. Every day in the market is a new day. But I find that there is still a lot of employment happening on the IT side, which is a very good barometer, because you don't create jobs if you don't have an opportunity. The deal size is increasing. Companies like TCS are coming and saying, but it's going to be a dream run for IT. They are migrating right now into digital, and they still have a lot to play on the cloud, and then they will play on the blockchain, and then they will play on meta, and then they will play on artificial intelligence. So there are multiple fields that are coming, and because these companies have adaptability, therefore I believe that they are much more sustainable. Only point is that if one company gives you 15% return for the year today, you should not feel disappointed, because the market is not such an easy market as it was in March 2020, post March 2020, and that should be respected. Now, the good part is 15% is based upon price of today, but when the market corrects, then that 15 has another 5 6 7% added, because the stock price is corrected, and therefore it makes the return for a new investment 22 or 23% becomes even more attractive. So therefore the concept of SIP or systematic investment.
Safir, another sector which a lot of people uh, regard very highly is insurance, because of the huge growth potential and how underpenetrated the space is. But somehow we haven't seen that pass through in terms of price action. Any reason why we've seen this underperformance?
Yeah, you should give me a prize, because I was one of those very few people who said that this insurance story will not play out, and therefore I had made it public, which was even published by Economic Times, why some of these insurance companies will massively underperform. See, what had happened is that COVID has taken away 2 years of people's lives. in COVID, when COVID started, a lot of people came with disputes. For example, somebody said that I have a rent dispute. Somebody said my export consignment has been cancelled, XYZ. These insurance companies did not honor this because some of them hid and said, but COVID is an extraordinary act and it is not covered by insurance. Somebody came and said, if you were so important for the insurance company that they didn't want to lose your business, they gave you some compensation, but they increased the cost of insurance for next year. And people said, you know what, this COVID is not an event that is going to recur every year, but you're increasing my cost of business uncertainty or protection. So in that sense, then some people said, you know, what am I going to do with the life insurance right now with higher premiums on life insurance when I'm actually locked down in my own house and I can't even do basic things except just, you know, sort of change one corner of my house to another corner and connect with somebody on Zoom or XYZ. So people started spending money on better experiences. At that time, the experience could have been, there was a huge surge. See, there was huge surge in the sale of luxury cars during COVID, but not of primary cars. People have been traveling and staying at, if you call up, yesterday Mr. Chaswal of Indian Hotels was on television and he said that domestic sales of hotels have never been so good. But there is no foreign sale. So there was again a shift that happened. That is what I'm trying to say. Every time a shift happens, somebody at one point of time, people were saying that with all these smart watches coming and smartphones coming, people will not buy watches anymore. But the company that caters to those watches and owns the brand Ethos, KDDL, their stock went to an all-time high. Gold companies did exceptionally well, and you know Titan went to an all-time high. So again, you have to look at the behavior of, because people said 2 years out of human life is a huge amount of time that you, and then people improved their homes and did many other things. Now everybody is buying real estate because they feel that if the problem comes, people particularly who are sharing and they're smaller homes, they're saying no, it's an opportunity for us and we want quality of life, etc., etc. So that's what I'm trying to say, that the opportunity was for real. The only thing is you have to understand the opportunity.
All right, awesome. Safi, before we wrap up, do you want to end this session in your classic style, a few lines of your favorite song to summarize the market action and the market mood?
No, the song is, see, one thing I want to tell investors, they get so perturbed by the market that I tell them that, you know, it is not as the market goes down, I don't lose money, I also lose money. I also feel bad. After all, I'm human. No, I can't just say that. No, I can't put up a false bravado saying that. For example, a few I do not remember the date, but some days back, maybe a few months back, the market was down 1,600 points on one day. My portfolio was also bleeding. So I literally went into a room and I said, I'm not going to talk to somebody for the next 2 hours. And I just kept a bottle of water with me. And then I thought that, assuming that this is true, what can I do from now onwards? Because the fact that the portfolio is down and the market down 1,600 is not like I can press a reset button and all of a sudden it'll come to zero. So what's the best I can do? So let me assume that I have to readjust my capital and therefore have a reset. I said, let me look at where the certainty is very high. That day, Balrampur Chini, which is a sugar company for those who don't know, and again, just these are only examples. I'm not a registered advisor, and I'm only talking about my personal experience. That day, Balrampur Chini was at 130. So I spent 2 hours or whatever time that I had in order to understand what is this ethanol business and is it for real. So everybody dismissed me and said no, but you know the story keeps coming up and this is that. The story was not a sugar story. This, and people did not understand it. It was an ethanol story. The ethanol story had a full incentive because it was a substitute for import and oil. It had a lot of other benefit. So, for example, some people said it will not be adapted, it will destroy the engine of the car. But you went to the car companies. I myself went to meet Audi, BMW, and a few others, and they said, no, it's working fine. It's already happening in the petrol blending. There were tri-party agreements that were signed with the oil marketing companies that were guaranteeing them payment. And those companies collect cash upfront. You go to fuel up your tank, the money is given up. You know, the money is collected there and then. It's not like a bad debt. It is only a bad debt as far as the government subsidy or impact on those oil companies are concerned, but not as far as the purchase of raw material is concerned. Then you came and said, this is the thing. So, for example, then you find a conviction and you say, you know what, I'm going to load up on it, depending upon the money you have or the shuffle that you want to make in your portfolio. And then now with Balrampur Chini at 500 rupees, how did it even matter that the market was 1,600 points down? So in between, enjoy the journey, cheer yourself up, spread smiles, read different things. Sometimes, like for example, immediately after this talk, I'm going to launch of a restaurant. So enjoy yourself, because then you feel that you're a winner. If you feel you're a winner, you will do it, and you will do it very well. If you feel doubtful about yourself, you don't have confidence, you feel that everything I do doesn't work out, I buy, the next day the stock falls, then you are already penalizing yourself, and that will make your journey extremely cumbersome. So I share songs out of joy. I sometimes suppose there's pain, so
They're
you
very
come and
good, by
say,
the way.
yeah, sometimes, for example, I'll give an example. Suppose my portfolio has fallen. So I say, Arey, I laugh. So people are asking, I mean, I'm laughing in my mind, not that. So people saying, why are you laughing? I say, oh, Rakesh Junjanwala would have lost more money than me today. So I'm in good company. It's like in a boat that is sinking, and you come and say that, you're with Tom Cruise and you're with all the people that you can. I'm with Virat Kohli in that boat, and I say, oh, Virat Kohli's portfolio is also going down today. Then you all of a sudden feel very nice, because you feel that you're in very good company. And then then your mind starts searching. You've given the mind the relevant oxygen to search for the next way in which you will come up, and that to me is the catalyst of winning.
That's awesome.
Excellent. Thank you so much for that. And quick disclaimer to everybody: always DYOR, do your own research before you make any stock market purchase. This is largely to help you understand the market better. And please don't misconstrue anything that we have discussed today as guidance to pick something up or sell something. So, again, DYOR, do your own research all the time.
We couldn't get Safir to sing any song, but thank you so much, Safir, any which ways, for taking the time out. And hope you have a great early weekend for the restaurant party. And for all the guys who are just tuning in, this was a really great session. And as always, it will be the first pinned post on our social handle. So in case you joined late, we highly recommend that you go and listen to the entire Spaces session from the start. Safir shares a lot of information, mainly on investing and how to approach if you're a first time investor, and it's tons of learnings. So definitely do check it out, guys. And in case you're new, do follow us and sign up to our daily rep newsletter, which is our daily newsletter that hits your inbox every day in the evening at 6. Safir, once again, thank you so much, and hope you have a great weekend.
Thank
You guys
you,
have
and
a great weekend
my
too.
apologies to others if I did not, talk in context of what I'm buying and what sectors and all do well. But we will schedule another call for that. Sometimes it is not good to sort of digest too much in one call. It just confuses the living daylights out of everybody. But I did sing a song. The song is called the Song of Inspiration, because all of a sudden I've inspired you to believe, and I inspired you to think long term, and to inspire you to think as optimist. And if you do that, you would have accomplished a lot in your life.
Yash was waiting for the song all evening. It's okay. We'll do it in the next session. That's fine. Thanks again, Safi. Really, really
Thank
appreciate
you.
it. And thank you all
Thank
for
you.
tuning
Awesome,
in.
guys. Take care,
You guys
invest
take
safe,
care and
and see
stay
you.
safe.
Thank you, everybody. Thanks. Bye.